Yes, we're going to look at September 2021, question number 2, September 2021. Thank you so much. That is 𝐂𝐻𝐶. 𝗂𝐻𝐶 is also there. Good. I trust kila mtu wako pale sasa, and I hope you're able to access that paper. Chanda and Pete. Good. So, want to just invite Maureen to read for us the question. Maureen, just take us through the question. Maureen. Yeah, Maureen, kindly take us through that question. Yes, Maureen, you can just unmute and do that. Just proceed.
Good morning.
Morning to you.
Just a minute, I'm just starting right now.
Okay, no worries.
Okay. Chanda Limited acquires 75% of the ordinary share capital of 𝐵𝑒𝑡 Limited on 1st May 2020 through a share exchange of 3 shares of Chanda Limited for 4 shares acquired in 𝐵𝑒𝑡 Limited on this date. The ordinary shares of Chanda Limited and 𝐵𝑒𝑡 Limited were fair valued at 40 shillings and 20 shillings per share respectively. The share exchange has not yet been recorded by Chanda Limited. Below are the draft financial statement of the 2 companies for the year ended 31st October 2020. Statement of comprehensive income of the year ended 31st October 2020. We have Chanda Limited, we have 𝐵𝑒𝑡 Limited. Revenue in shillings, in million, both of them. Revenue, we have 28,200. In 𝐵𝑒𝑡, we have 8,720. Cost of sales, we have 12,800. On 𝐵𝑒𝑡, we have 3,240. Gross profit, we have 15,400. On 𝐵𝑒𝑡, we have 5,480. Distribution cost, we have 2,320. In 𝐵𝑒𝑡, we have 640. Administrative expenses, we have 3,680. In 𝐵𝑒𝑡, we have 1,120. Investment income, we have 1,840. In 𝐵𝑒𝑡, we have 80. Finance cost, we have 4,080. In 𝐵𝑒𝑡, we have 560. Profit before tax, we have 10,760. In 𝐵𝑒𝑡, we have 3,240. Income tax expense, we have 2,060. In 𝐵𝑒𝑡, we have 600. Profit for the year, we have 8,700 for Chanda. In 𝐵𝑒𝑡, we have 2,640. Other comprehensive income, we have gain on revaluation of land at 112. In 𝐵𝑒𝑡, we have 120. Total comprehensive income, we have 8,812. In 𝐵𝑒𝑡, we have 2,760. Statement of financial position as at 31st October 2020. We have Chanda, we have 𝐵𝑒𝑡 in millions. Assets, we have non-current assets, property, plant and equipment, 24,360 for Chanda. For 𝐵𝑒𝑡, 7,560. Financial assets, we have 8,120. For 𝐵𝑒𝑡, we have 2,520. Total, we have 32,480 for Chanda. For 𝐵𝑒𝑡, we have 1080. Current asset, we have the inventory at 4,832. And for Pete, we have 2,000. Trade receivable, we have 4,768. For Pete, we have 1,960. Bank, we have 3,200 for Chanda. For Pete, we have 1,320. Total, we have 12,800 for Chanda, 5,280 for Pete. Then we have total assets, 45,280, 15,360. Equity and liability, equity, ordinary share capital at a par value of 10 shillings, 8,000, 3,200. Revolution surplus, we have 2,260, 420. Retained earnings, 26 and 60, 47.80. Total, we have 36,320 for Chanda, 8,400 for Pete. Non-current liability, 10% loan stock at 2,400, 3,200. Current liability, we have trade payable at 4,920, 2,820. Current tax payable, we have 1,640, 940. Total, we have 6,560 for Chanda. For Pete, we have 3,760. Total equity and total liability, 45,280, 15,360. Additional information. 1. A fair value exercise conducted on 1st May 2020 concluded that the carrying amount of Pete Limited net asset approximated their fair values with the exemptions of an item of plant and equipment which had fair value of 320 million shillings in excess of its carrying amount. As at 1st May 2020, the item of plant and equipment had remaining life of 4 years. Depreciation is being charged on straight line basis to cost of sales. Additional number 2. In the post-acquisition period, Chanda Limited sold good worth 1,500 million shillings to Pete Limited. Pete Limited had 1 quarter of these goods in inventory as 31st October 2020. All of these goods had a markup on cost of 30%. 3. Chanda Limited trade receivable include 320 million shillings due from Pete Limited, which did not reconcile with the corresponding trade payable. This was due to cash paid by Pete Limited, which had not received by Chanda Limited as at 31st October 2020. Additional number 4, Chanda Limited has a policy of measuring the non-controlling interest at a fair value. As at 1st May 2020, the non-controlling interest in Pete Limited were fair valued on the basis of the market price of Pete Limited ordinary shares. Additional number 5, goodwill arising on acquisition of Pete Limited was impairment tested on 31st October 2020 and non-impairment was deemed necessary. 6. All other comprehensive income occurred after 1st May 2020 unless otherwise inducted. All other items of incomes and expenses were deemed to accrue evenly over the year. Required: goodwill arising on acquisition investment in Pete Limited. B. Consolidated statement of comprehensive income for the year ended 31st October 2020. C. Consolidated statement of financial position as at 31st October 2020.
Okay, good. Thank you so much, Maureen, for that. Done it very well. Asante sana. Good. Now, team, what we said is that we have several forms of consideration. Forms of consideration. Who can remind us? Forms of consideration. So who can just remind us one or two? Form of consideration. We have, yes, thank you, Esther. Cash, through deferred consideration, share to share exchange, same as share to share exchange, yeah, share to share consideration. The parent company is paying the shares either through cash, through the share exchange. You can do that through contingent. No, wait, Florence, wait. Florence, consideration, not the main thing that where we start. Considerations, forms of consideration, how the parent company can pay for the shares acquired from either the associate or the joint venture subsidiary. So it is deferred consideration, contingent consideration, cash. They can pay through cash, like the previous question that we did, it was through cash. Now this question, the consideration is through share to share exchange. Consideration na this question is share to share exchange. Unanipatia share zako na mimi nakufanya nini? Nakupatia shares. Of course, there is that exchange ratio. Share to share exchange. Good. After knowing that, you go direct to the first item, or identify the first thing. What is the first thing that you need to identify? And once we identify that, class, we don't have anything else to do other than to have our pro forma. What should we just understand about this question? At the beginning, in a group question, what should we do? It's something that if we don't start there, we are not able to proceed with this question. What should we do? Identify the group structure. Thank you, Rasbon. Yes, that one is the key. Sharewa hiyo, nothing more. Group structure. This is what I want us to identify with you. Group structure. For the group structure, we have two companies. Kuna Chanda hapa na niko na ni Pete. Najita Pete. Pete Limited. Pete Limited. Kuna Chanda and Pete Limited. And we'll be told that Chanda Limited acquired 75% ordinary share capital. I just leave it like that. But I have to ask myself, when did Chanda Limited acquire Pete? When? So you ask yourself, when? Date of acquisition. Sasa hapa ndio Florence tuko hapo sasa. Date of acquisition. When? Just check. When did Chanda acquire Pete? Is it 31st of October 2020? Is it 31st of October 2020? Date of acquisition? Just check. Angalia tu. It is 1st of May. Yeah. What about 31st of October 2020? What happened? What is that? 31st of October 2020? It is the date of financial reporting. Thank you. Yeah. We have DOF. So, thank you for noticing. It is 1st of May 2020. Then we are preparing this financial statement on 31st of October 2020. 31st of October 2020. Let me know the start date of this financial year. Who can give us the start date very fast? Even you go to, that is where you start. Kwanza unaelewa the group structure. the group structure. 1st of November, syndication. If I stand today to be the 31st, I'm closing my financial statement. Now tomorrow, 1st of November, of course, I have to backdate with 12 months. Thank you so much, Esther. So the start date of financial year is 1st of November. November ni mwezi wa 9, 2019. Good. Now, between Chanda and Pete, who do you think will be the parent? According to the information given. Between Chanda and Pete, who is the parent? Who is the parent? Chanda. Yeah, Chanda is acquiring 75%. This percentage is more than 50%. Therefore, this is the parent company. This is the subsidiary company. Done. Now, the other item that we are trying to look at is whether the items of the subsidiary will be apportioned. How do we look at that? I just check here. Just check. Just check the start. Just check here. I just check. Is this date of acquisition within the financial year? Hapo unajiuliza hivyo. Is the date of acquisition within the financial year? And so yes. Yeah, I can see it is within the financial year. Therefore, at that point, I know that there will be apportionment. But I want to know how many months did we stay with this Pete Limited. So from 1st of May to 1st of September 29. Wait a minute. To 31st of October 2020. How many months? Yeah. Start date. Yes, 11. Oh, thank you. This November, exactly. November. Tomorrow, November. Yes. So how many months? So niko na May, June, July, August, September, October at the end, 6 months. Yes. So I'll be apportioning by 6/12. So apportionment is guaranteed. Apportionment of the items of the subsidiary company, we are going to apportion under income statement. Do we apportion item under balance sheet? As far as the subsidiary is concerned? No, don't apportion that. Good. After doing that, what else do I need? This question, examiner decided that he wants us to come up with a goodwill. Goodwill of Pete. Of course, goodwill here, either those companies which are being acquired. You find goodwill for those companies which are being acquired. May it be a subsidiary, joint venture, associate. You find goodwill not for the parent company. Utafuti goodwill ya parent. It is for those companies which are being acquired. Now, since they want us to get goodwill, lazima sasa hapa tufanye some workings kidogo so that you're able to know what was the purchase consideration. I can see this was share-to-share exchange. Therefore, we need to be very keen when it comes to share-to-share exchange. This one we haven't done, and that's why I decided we do this so that we're able to know how we are supposed to approach such purchase consideration. What we've been told is that Chanda Limited acquired 75% of shares from Pete Limited. So I need to know the share exchange. Wanabadilishana aje? 3 shares for every 4. Si ndio tumeambiwa? 3 shares for every 4. How are they trying to exchange this? 3 shares for every 4. Right? 3 shares for every 4. 3 shares for every 4. The question is it possible for us to get the number of shares in Pete Limited? Is it possible? We go, hiyo unaenda direct mahali tuko na nini? Mahali tuko na where we have the ordinary share. Ordinary share. Are we there? Are we there? Ordinary share for Pete is 3,200. That is the value of share. The value of share. Tulisema value of share. Three things. Number of share na par value. So mi nataka tupate number of shares. So if the value of share is 300 and they are telling us 3,200, yeah? If I eliminate 3 zeros, 3,200. Here the value of share. Shares in this company are worth 3.2 million, or that 200. Yes. And the par value in ngapi? I would like that to come from you. Par value. Please, 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 please. Be very active. Itakusaidia sana. Itakusaidia sana. Par value in ngapi? 10. Yes, 10. 10. Make sure you are able to see it. So class, if I want to get the number of share, I'll be able to get, because I know that value of share, I want to do it step by step so that you get value of share is equal to number of share times the number of share times the par value. Right? Therefore, I'll be able to make the number of share the subject. I divide by the par value. I divide both sides by the par value. So the number of share is equal to value of share divided by what? By the par value. So I'll be able to have that 200 by 10. So our number of share ni ngapi? Our number of share ni ngapi? 320. Thank you. Please have that. Number of shares. Where am I looking for this number of share? Because there is a share, this is a share to share exchange. And I want to know the purchase consideration because I've been told something here by this great examiner. Ameniambia kwamba China Limited acquired 75% of ordinary share capital of Pete Limited on that date through a share exchange of 3 shares of China Limited for 4 shares acquired in Pete Limited. 3 shares, 3 out of 4. 3 shares of 4. 3 out of 4. On this date, the ordinary share of China Limited and Pete Limited were fair valued at 40 and 20 shilling per share. Hasa, ukishapata hiyo, just note that this question has got NCI. It has got NCI. So automatically, which method of goodwill are we going to use? Automatically, when we have NCI. Which method of goodwill are we going to use? Full goodwill method. Full goodwill method. Good. Now, class, after identifying the number of shares, it is 320. 320. How much did the parent acquire from this? Hiyo ndio unajiuliza tu na utakuwa sawa. How much did the parent acquire from that? How much? Parent ilichukua ngapi? Shares ngapi? Hapo sasa ndio tu uko sawa. Uko sawa. That's gonna tuambia 240. Yes, you need to think of 75%. 75% of 320 is what the parent acquired. Right? 204, 240. 240. That is the number of shares acquired by the parent company. But there is an exchange ratio. For every 3 shares from China Limited, they are being exchanged by 4 shares in Pete Limited. Therefore, you can ask yourself if I can even say these 3 shares are being exchanged by 4. Are being exchanged by 4. What about 204? 240. 240 itakuja hii side ama hii side. Si sasa hii ndio imeacquire from that. 240 itakuwa pande gani? Hapa ama hapa? 240, somebody? Somebody? 240, these are 3 shares in Chanda. Chanda are being exchanged by 4 in Pete. So 240 itakuwa under 3, sindio? And these 204, 240 itakuwa exchanged na shares ngapi? Ni kwa 4 ama ni kwa 3? Okay. Hizi shares acquired from Pete. So we need to get, want us to wear 1 hapa. This is 3. 3 shares of Chanda Limited are being exchanged by 4 shares of Pete. This 240 inatoka kwa Pete, right? Sindio? So 240. Tunaweza jiuliza na what about 240 itakuwa? How many shares? How many shares? How many shares? So it will be 3 times 240 divided by 4. How much are you getting? How much are you getting? Yeah, 3 times 240 divided by 4. How much are you getting? 180. So we are having 180 shares. 180 shares. These are the shares acquired by or through the exchange. These are the shares that we are dealing with. These are the shares that we are dealing with. Now, these shares, if you consider the market value or the market price, shares, these are shares. If you consider the market price under Chanda Limited, each share is going at how much? Market price under Chanda. Under Chanda Limited, each share is going at 40 shillings. 40 shillings. So total consideration will be 180 times 40. How much is that? Total consideration will be 180 times that, 7,200. So we're going to pay. This is the amount of money that our Chanda Limited is going to pay to Pete Limited. The amount in terms of cash now, it is 7.2 million. 7.2 million. Then on the other side, we are having NCI. We are having NCI. We can look at the price. What is the price of the NCI? Non-controlling interest price. Market price. Ni 20 ama? Market price of the NCI. Just check. Check. NCI. Price. Market price. Market value. Market price. Fair value. Meambiwa ngapi? It is there. Are you able to see 20 shillings? It is 20 shillings. But now, if parent company acquired 75% of these shares, 75% of these, there is a 25% which NCI will take. So NCI value will be 25% of 320 times what? Times 20. So what will be the value of NCI? Get the value of NCI. NCI itakuwa ngapi? 1,600. So these are the 2 items that we need when coming up with a goodwill. Those 2 items we need when coming up with a goodwill. The other part I want us to look at is the ordinary share, because there was an increase here. Ordinary share. So we are having 180 shares. 180 shares. And this, if I look at the price change, the price has just changed to just 100 minus 100 florins, 100 minus 75. Whatever that the parent picked, 100 minus 25, 75. So we're saying that we have 180 shares, right? 180. We want to see the effect of this change in price. What was the par value? The par value was previously 10 shillings. But now the par value has changed to 40. So there's a difference here which we call premium. Premium ni ngapi? 30. Yeah, 30. So you need to consider the change in our what? The change in our ordinary share, and then we look at how much premium do we have? Share premium do we have? How much share premium do we have? So I'll be having 180 times 30. How much is that? So in our balance sheet, there is a new item coming in, share premium. How much will that be? There will be a new item coming in. How much? 5,400. 5,400. Our ordinary share will increase by 180 shares. Ordinary share in share premium. Ordinary share will increase by 180. So 180 times 10. So ordinary share, whatever that we shall be having. Now, we used to say that if the consideration is through cash, under ordinary share, we pick that of the parent only. Listen, we pick that of the parent only. But now, under this, we've seen that the ordinary share, we've added some shares in our company. In our Chanda Limited, shares may increase. Therefore, we shall also include this one, and we shall have a new item under this. Are we together? Under the equity section, we have a new item. Imekuja, it was not there. And then we have the ordinary share will increase. That of the parent, we expect it to increase with this item. Please confirm if we are together up to that point. Are we together? Are we together? Are we together? On the premium. Yeah, premium is the price above the par. Price above the par. Price above the par. The par value was previously 10. Par value was 10. But now the market price under Chanda is 40 shillings. So price above the par is 30. Is 30. Therefore, we are able now to get the value. The value, our share premium through the number of share times the price above the par value. Price above the par. So this one under the balance sheet will be an item by itself, and then we shall be having our ordinary share increase. It'll go by that. I think under our published account, we also had a question of such. Sindio? You remember? We had a search. We had search. Good. I think now we can get our goodwill, compute our goodwill. Goodwill. But the goodwill yet. So goodwill on 𝗡𝗡. I have purchase consideration. $7,200. This one. Add NCI at fair value. 1,600. This one. I get total consideration. If I add the two, I'm getting 800. Then less fair value of net asset at the date of acquisition. Please give me the fair value. Ordinary share, how much? Ordinary share, of course, under the subsidiary. Ordinary share in ngapi? Just give me that. Ngapi? Ordinary share. Ordinary share. The question, just check under the 𝗡𝗡 Limited. equity. Those items of equity. Is it 3200? Number of shares? The ordinary share at 200. I also need to check any other item. Additional information number 1, give us revaluation. What is the revaluation? Revaluation. The 320. Revaluation. Additional information. Then we can get the retained earning. Retained earning. So retained earning in this case, I think because we have apportionment, it will be prudent for us to look for it. Retained earning. What is the retained earning as far as this balance sheet is concerned? Retained earning. Retained earning as far as our balance sheet is concerned. Unatupia ngapi? Unaona ile 4780. 4780, si ndio? Retained earning as far as our balance sheet is concerned is 4780. You've been able to see that. Retained earning and Pete Limited. Pete Limited, 4780. 4780. 780. Aha. This one was acquired as 6 months. We're having 6 months this side, 6 months this side. And I want at the date of acquisition, how much was the retained earning? How much was the retained earning at the date of acquisition? So I need to come and ask myself, what was the retained earning? What was the profit? Profit after tax for Pete. Profit after tax for Pete ni ngapi class? Profit after tax for Pete class, how much? Profit for the year, that is 2640. 2640. Profit for the year. 2640. We know that these include this. Hiyo tulisema. True or false, kindly. Hii iko ndani ya hii. True or false. So itabidi kwanza tuitoe. So that we are able to know what was the profit or the retained earning balance brought down from the previous year, because that is what we need. We want to get this at the date of acquisition. At that date that we acquired this, ndio tunataka tujue what was the retained earning at that point. So half of this will be part of, kwa sababu a half financial year this company stayed alone or generated that profit alone. So a half of that. So we have to eliminate the 2640 kutoka kwa our retained earning. Our retained earning. So 4780 minus 2640. So that we know what was the balance of the retained earning. According 2140. 2140. And then we add a half. See 6 over 12 of 2640. 2640 we add here. Kwa ngapi? What is a half of 2640? Well, 1320. Sindio? 1070. Hai. Well, half. Sinagawa tu 1320. 1320. So hizo mbili ndizo zinanipatia. Please now let's get the retained earning to put under that point. Let's get that. Acha tupate hiyo retained earning. Ngapi? Toto ya hii. Ongeza hizi mbili. Hiyo ndio retained earning ile tunahitaji. So ukuwe makini hapo kwa when there is apportionment, you need to be very keen. So that is it. 3460. So I think we're done. We're done. Please get the totals and take them to the last column. Get the total and take them to the last column. Get the total. Total ni ngapi? What is the total? Total ni ngapi? Na tumalizane na hizo marks. 6980. Should I apportion times 75%? Should I apportion? Should I apportion? Just state what you think we should do. Should we apportion? Should we apportion? It's a big no, right? It's a big no. This is a full goodwill method. Wakati tumetumia NCI hapa inamaanisha here we are picking 75%, here we are picking 25%, giving me 100%. So there's no need to apportion. There's no need to apportion. So I'll be able to pick menipatia ngapi sasa? 69, 90. Huh? Menipatia ngapi class? You see, imepita hapo. Yeah, 69, 80, 69, 80. 980. So just less that one, direct. I get the goodwill. Because we don't have impairment. We were told down there that they tested and there was no anything to do with the impairment. Therefore, ndio itakuwa goodwill at reporting. If there's no impairment, these now become goodwill at reporting. Kama hakuna impairment, hiyo ndio sasa tutapeleka kwa SOFT, Statement of Financial Operation. And you have your marks. You have your marks. Si tuko pamoja hadi hapo? Si tuko pamoja hadi hapo? We together? Are we together? Are we together? Are we together? Okay, good. This, please finish up, finish up. Once you're done, please confirm. Once you're done, please confirm so that you're able to move to the next part B, part 2. Once you're done, please confirm. Once you're done, you can just state done, done, done. But you're able to the next part. Chanda Limited. Consolidated income statement for the year ended the 1st of October 22. Is it 22 or 21? 22. 2020. Good class. As usual, we can have our column there, shillings in thousand, and I have the revenue. Let me have my yes, last born has got a question. Unmute, yes. Has got a question. Last born, kindly ask. Kindly unmute and ask. Please unmute and ask. I'm on tap type, whichever. Can unmute. I've already allowed you to unmute. Husband, is your chance to ask the question. Husband, be able to unmute and ask the question. Okay, can as well type. No worries. Good. Revenue. We pick 100% of the parent. 100% of the parent revenue in ngapi? Our parent revenue, how much? How much is our parent revenue? 28,200, 100%. 28,200. Then we add a portion of the subsidiary. Subsidiary is 8720 times 6/12. Then tunaiacha hivyo. Tunaiacha hivyo. Gain on liberation of land. Gain on liberation of land. Okay, last one is asking a nice question. There is the liberation ka surplus pale kwa you're having liberation surplus. You're talking about that liberation surplus. Liberation surplus. Last one. That is in our balance sheet. That liberation will never affect what? Will never affect the goodwill. That liberation will never affect the goodwill. The one that is in the balance sheet will never affect the goodwill. Lakini sasa, the liberation yetu ya additional information number 1 ndio hii. Last born. Liberation in the additional information number 1. This one. And other comprehensive income, the 120, 112. That still will not affect. Those two revaluations will not affect our goodwill, will not affect our goodwill. The other comprehensive income and that one will not affect our goodwill. So, good. Then we move to the cost of sale. Cost of sale. Cost of sale, parent has got 12,800. What about subsidiary? 12,800 plus subsidiary iko na ngapi? Is it 3240? 3240 times 6/12. Remember, I need space to adjust my items. That's why naacha subspace there. I get the gross profit. Then I go to the expenses. Niko na kitu kama distribution cost. Distribution cost. By the way, what did we mention about distribution cost, class? If somebody can remind us, 2320 plus 2320. Subsidiary iko na ngapi? Distribution cost. To adjust this. Subsidiary iko na ngapi? Subsidiary iko na ngapi? 640. Sasa basi si tupate hii free marks times 6. Ushajua una portion. We can get that one very fast. Let's get a distribution. It's a free mark. It's a free mark. Hiyo haina maneno. Direct. Ni ngapi? 23 plus a half of this. Acha tupate hiyo mark. Remember mark tulisema ni huko yenye iko hapo. 2640. Hiyo tumemalizana nayo. Twende kwa the next one, admin expenses. Admin expenses. Now class, admin expenses, it's always affected by what? Adjusted by? Admin expenses always adjusted by which item? Naona tuko na 680. Yaani hizo ni vitu unafaa kujua. Ukishazijua, bwana hapa hakuna kitu. Then 1120 times 6/12. So if there is no impairment, that's still a free marks. In our question, did you have any impairment? Ulikuwa na impairment kweli? Is it an no or less? There was no. So give me that as well. You just imagine. Hii kitu, if you're very keen, this is a savior. Cash flow savior. Published account savior. 4240 direct. Hapo hakuna kitu nimefanya, just a direct one. I go to we have something else, but it has something to do with the investment income. Tulisema ukitaka kuongeza kama unaweza ongeza investment income. Parent akona ngapi? Kumbuka income ni, so I need to put bracket hapa. Parent akona ngapi? Investment income. Before we go to finance cost data, investment income, parent, 1840. Do we have that of subsidiary? Subsidiary akona kitu? No, Subsidiary akona 80. So you have to add 80 times, of course, a half, or 6/12. So itakuwa 1880. 1880. Remember that one is a what? That one is an income. Finance cost, hii ikuwa na maths free mingi sana jameni. Yani group question, hata swali, tanuambia. Even if examiner bring a very long question, in fact, that is the best. Hata ikuwe mrefu waji. Page 1.5. Swali moja. Wewe unafurahi sana. Just remember the 6 golden rules and you are good to go. You don't need anything else. You're good to go. Kwani hapa sasa hizi ni marks tunapata hata bila kufanya anything. We have not done anything. Only that we understood the group structure and we are good to go. Yes. Okay, finance cost tuko na 1840. Ni 1840 hapana. Finance cost ya kwanza for the parent. Finance cost 480 plus subsidiary. Finance cost for subsidiary gapi? Finance cost for subsidiary 540, 560. Of course times 6/12. Na sasa hiyo pia ni another free mark. Please give me that so that we get our profit before. When you get rahisi aje. 760. Remember that one tunatoa. Now, we continue. I know here I need a gross profit. Sawa. I continue. That one I cannot get. I less tax. Tax pia ni free marks. Sasa class hebu niambie ni iko ngumu pande gani? This one is a savior. But only if the first group structure section uko sawa. Tax yetu, I'm having tax of 2060 na 600. 2060 plus 600 times 6/12. How much will I get? Itakuwa 2360 hapa. 360. And then I'll be able to get the rest that I get the profit after tax. Profit after tax. Class. Mimi nataka tu niambie. For this one. Was there something difficult? Anything that was difficult to indicate all this? Have we struggled so much? It's a no. So don't be scared by a longer question. Ati, hey, ini mrefu sana. Remember the golden rules. What affect admin? What affect distribution? Nothing. Admin, impairment. Is there impairment? Yes. Then add it. Another item. Now, after this, there's another item that we get hata tukiwa tumefunga macho. Which one? Yenye hatujapata. That we get hata tukiwa tumefunga macho. Hiyo ya month kwanza Nancy inakuwa rahisi, eh? Ukishazipanga vizuri, it become very easy. Which other item that we can get direct? Yani atu struggle sana. I just need to know what affect that item. Sini revenue. What affect revenue? Intercompany sales. So naenda kwa swali yangu naangalia ni wapi kwa hizo additional information wana mention intercompany sales. What did Chanda sell to Pete, or what did Pete sell to Chanda? And you just check. It does not matter whether it's upstream or downstream. Bora, that is the sale. So what is our intercompany sale? Nikuja nitoe hapa, alafu nipate hiyo mark. Never fear this question. This is the game changer in your paper. It's 1560. So nakuja tu natoa 1560 hapa. Na najuaga pia inatolewa hapa 1560. So nimepiga 2 birds with 1 stone already. Nimepiga 2 birds with 1 stone. Na hapa huyu mwanafunzi amepata marks mingi sana huyu. Huyu hata akiachia hapa, unaweza kuta akipata almost all the marks. Huyu akiachia hapa hivi. So what is my revenue? I told you that marks zako ni huku mwisho. Adjustment wacha marks ni huku mwisho. So lazima una make sure umeindicate hapo. Marks yetu tupate hii mark ya revenue. Let's get the mark of revenue, and then we go to the other adjustment of the cost of sale, and that will be it. Itakuwa tunamaliza 31,000 being given 31,000. What other item? Remember, cost of sale ndio inaafektiwa na item mingi. Kama realize what we are doing, cost of sale is being affected by most items. So what else will affect cost of sale? ULP, yes. And realized profit on closing stock. And also depreciation. Yes. It affects both revenue and cost. Thank you. That is Monica for asking that. Yes, it affects both revenue and what. So ukiona wewe unaweka like that, ukiwa umesoma. Haya basi. Wacha tutafute hizo item mmesema zina affect cost of sales. Sasa hapo ndio tu working inakuaga. Just at that place, at that point you do some working. Nani kidogo. Kwani iko namna gani? See, even from your end, I can tell you to find a depreciation under charge. Just try. Try to find depreciation under charge. You imagine mnaweza pata. Hata UPS. Just let's start with the depreciation under charge. Just a minute. Just try. Ebu jaribu. Unajiamini, from today, believe in yourself and move with this thing. This is a one-time thing to pass. Naangalia hizo past paper from 1989 when KASNEB started. Niambie kama utakosa group question. Niambie. From 1989. Niambie. Haikosi. Hiyo ndio FR. I want you to have that concept. Hiyo ndio FR. Nancy atuambia 80. Haya. Wow. And I will always remind you that depreciation is a balance sheet, is a income statement item. Therefore, it is affected like any other when it comes to the subsidiary company. So ukue makini sana, ukue makini sana. Remember that is a subsidiary item, and what subsidiary here kuna portion. I hope hiyo ndio bado watu wamesahau, wamesahau. Kuna portion, So depreciation under charge. Depreciation under charge. Tunaichukulia under charge kwa sababu the fair value was greater than the carrying amount. If it was vice versa, itakuwa overcharge. Na nilisema sitaki kusema zote mbili at once. Ukishashika moja, kama the fair value is greater than the carrying amount, that is automatically an undercharge. It will give you an undercharge. So it is the revaluation, which is 320. Revaluation ilikuwa 320, si ndio? Na miaka ilikuwa inaenda ngapi? How many years? They use 5, 4. And then you have to apportion by 6/12. This is an income statement item. So, and it is part of the subsidiary. That's why people are getting 40. Nakuja naongeza 40. And then I go to UPS. Brainy. All right, sorry for that. I forgot that Brainy is coming from this great country where Swahili is not commonly used. Okay, Brainy, what you are saying, Brainy, have you gotten your 80? Have you gotten your 80 first? The 320 getting depreciation. Of course, you get the cost. You look at the additional information, you'll find the revaluation of that item. 320 divided by 4. We get 80, and then we have to apportion that. You need to apportion that. Brainy, are we now together? Good. So, now we go to getting the UPS. Test yourself. Try to get UPS. And remember, UPS is a balance sheet item, so no apportionment. Those are the key things. Those are the things the tips that you need to put them here. Yeah, UPS you can't apportion. It's a balance sheet item. We don't apportion in consolidation. So can you try UPS? Tatuone. Try UPS. These things are simple. Let's see what people will get. Try UPS. I gave you the formula. And you have all that it takes for you to get that. Very simple. The UPS, let's get the UPS. And realized profit on closing the stock. Who will be the first one to give us something under that? Who will be the first one to give us something under that? We have 𝐂𝐻𝐿 anapatia 90. 𝐂𝐻𝐿 anapatia 90. 𝐂𝐻𝐿 anapatia 90. Being confirmed by Rasborn, Esther. You guys, let's see. What have they told us about the UPS here? What have they told us about the UPS? I know to get the URP, UPS, and realized profit, UPS, and realized profit on closing, I need remaining intra-sales risk times the profit margin. If they give me the markup, I change that to margin. If they give me the markup, I change that to margin. Now, they gave me the markup of 30%. So what will be my margin? If markup is 30 over 100, markup is 30 over 100. Markup is 30 over 100. Margin will be how much? Of course, 30 over 100 plus 30. 30 over 130. This is what I wanted. Yes, I must translate markup. The examiner will bring you markup so that you are confused. Or you use it and get the UPS wrongly. And then I ask myself, did they tell me how much remain in store? Yes, a quarter of the things remain in store, a quarter of these goods. Remember, we're looking at this great additional information. We're looking at this great additional information where we had our sales. This great additional information number 2. In the post-acquisition period, Chanda Limited sold good worth 1560 million to Pete Limited. Pete Limited had 1/4 of this good. So the remaining intra-sale is 1/4 of 1560, the goods that were sold to it. Even ndivyo unapata 1/4 over 1560. You got how much? 1/4 of 1560. Those are now the remaining intra-sales. How much? Remaining intra-sales. How much? 390. These are the goods that remain in store. Remaining after they sold, these goods remain. Therefore, to get my UPS, I'll just come and pick 3 over 13 times 390. 3 over 13 times 390. Is that what give you 90? Is that what give you 90? Great. You can celebrate yourself. That's a milestone. I add 90 and I'll be able now to get my cost of sale, gross profit. I get the profit before tax. Kila kitu imefunguliwa sasa. Kila kitu, everything. We've opened everything. So can you give me the cost of sale, class? Please give me the cost of sale. Give me the cost of sale. $12,990. $12,990. That is what we are going to less. $12,990. Let's get our gross profit, Basi. 31 minus that. $18,010. 0.10. Ongeza hii investment income, alafu utoe hizo stuff zingine tupate profit before tax. Tupate profit before tax. Ongeza hiyo, just add the investment, then you'll be able to do what? You'll be able to 12 to 50. Hiyo ni nini? Walter or Will Kister? How much is that? 12 to 50? Ni hii hapa. Ama profit before tax, right? Profit before tax. Profit before tax. Sorry. It is 12 to 50. 12 to 50. 12 to 50. And then 98, 90. Is that 98, 90 the final? 98, 90 the final? Is that 98, 90 the profit after tax? Then examiner give you your marks like that. You are done. So for group consolidation, where we have most adjustment ni kwa cost of sale. Where we have most adjustment ni kwa cost of sale. Na wacha ikuwe ya mwisho. Fanya hizo vitu zingine, wacha hiyo ikuwe ya mwisho. Let it be the last one. Don't struggle finding those items if you've not filled the others. The way we are approaching this question, that is how you are supposed to approach it even in an exam. And we're not looking for you to be perfect, by the way. We're not looking for you to just indicate all the correct entries. All the correct entries first. A few mambo ingine, you sort it later. So that is it. If you would like, you can now apportion this one. You can apportion. You can appropriate. So profit attributable to the parent, profit attributable to the though ukumbuke kwamba that one haikupatii marks, but it's just a part to complete that area. So profit attributable, maybe during your own free time you can try that. Profit attributable to that. Sasa, see, you try doing the balance sheet, as even you have the as you have your just try just try and do the balance sheet, then share in the group size. Just try hiyo kwanza ndio rahisi zaidi. Hizo items zake zote rahisi zaidi. Ni just a matter of adding and subtracting. Ukipatana na intercompany debt, you know what to do. So we are trying that as we relax for some few minutes. So by around 6:35, you should be having something. 6:35. Should be having something. Just try and share something. The group. Very fast we can try to put things together. We have the PPE, and the parent PPE kungapi? Parent company, is it 24,360? 24,360. Parent company, is that correct? Just confirm whether hiyo iko sawa. Good. Then subsidiary 7560 plus 7560 plus 7560. Should I apportion? 7560 subsidiary. So no, a big no. Tafadhali. No. Good. Now, what affect PPE? Ukishajua hivyo, hii vitu bana, na tushazifanya huko kwa income statement. So it become easier for now the balance sheet. So depreciation under charge, you less. Revaluation, you add. Wow. So revaluation was 320. It increases the PPE. Depreciation reduces what? Depreciation reduces depreciation was how much? I think it was here 40. You can give me the total. Give me the total. Then we have financial assets. Na tulikuwa na goodwill. Goodwill hiyo ilikuwa 1820. That one has no problem. 1820 direct hapo. 32 200. 32 200. 32 200. Hizo ni max. Hizo ni max. Financial assets, this is just a matter of adding the two. Financial asset haina maneno mingi. It's just 8120 2520. 8120 plus 2520. Just like that, and I'm done. Give me that. How much? 10,640. 10,640. I know you have that. Continue marking. Continue marking. We go to the current assets. Current assets. What affect inventory? What affect inventory? Hivyo, yani, yes, I bring together and then I less the UPS. So unaona tushamalizana na kazi yote, tushamalizana. The moment ulifanya income statement sawa, hii mambo ingine inakuwa very simple. So I have 4832 plus 2000, 4832 plus 2000 minus 90. 90 ndiyo hii. Our UPS. I'll get 6742. And that is what people got. 732. 6742, not 32, but 42. 6742. Thank you so much. Then I'll be able to come to receivable. What affect receivable? And hizo tips. Unazishika. Zishika. You eliminate the intercompany debt. Hapo walikuwa wametupatia intercompany debt. Ama kulikuwa kunaenda aje hapa. Hapo walikuwa they forgot to give us the cash, the whatever cash in transit. They did not give us the specific figure. Lakini if there is a cash in transit, for instance, let's say maybe 40, and they have told us that intercompany sales, intercompany debt is 320, what do you think will be the debt remaining? Nataka tu tufikirie ili time utapewa the cash in transit, you need to approach it that way. We have debt of 320 million or 1,000, and then they have told us that there is a cash in transit imetumwa. Hajafika bado, but it is in transit of 40. So what do you think will be the debt remaining? You assume that ile 40 imekuja ku offset. Ku offset deni, yeah? Si sasa inalipwa. Ka inalipwa. Mbona unaongeza? Ni kama inalipwa. So that's the scenario. But in this case, hawakutupatia, they did not give us. They did not give us the cash in transit value. So sisi treat our receivable as kawaida. So we shall deduct the 320 direct. You hatuta, no negotiation. We shall deduct it. So I just pick 4768, 1960. 4768 plus 1960. And then I deduct the 320. I'm done. And cash, equal free mark, 6408, right? 6408. Then I have that 200 plus 1320. 200 plus 1320. In 6408. And then hii ingine ni ngapi? Then equity and liability section. And liability. Equity and liability section. 4520, asante. Yani hizi ni marks tu. Wewe usijali ati umemiss moja. Nilikwambia hata you don't this is a total asset, ni sawa, total asset. Hata hapa don't even consider kushinda ukiwaste time. Please don't waste time first of all getting the total. But you want to get that. Don't waste time. Wewe marks zako ushapata marks zako. Hakuna mtu hata anahusika na total. At this level, hakuna mtu anahusika na hizi toto zenye utapata hapa. So don't waste time. Leave it like that. Naona watu sasa hata wana yes like that. That's okay. That's okay. Wewe pata marks zako ukisonga. Once you are through with the 5 questions, once you are through doing the 5 questions, you can now come back and start beautifying. That one we call it to beautify your work. You can now come back and start beautifying your work by getting now totals. But it is after you are done with the 5 questions. After you're done. But at this level, you continue, get marks. Ordinary share. Ordinary share. Ordinary share. Ya parent ilikuwa ngapi? Ordinary share. Ordinary share ya parent ilikuwa ngapi? Ordinary share capital. ilikuwa 8,000, ni 8 ama ni 80? 8,000, right? 8,000. But there was an increase because this was a share-to-share exchange. There was an increase in this one. Increased by 1,800. You come and add 1,800 here. Hivyo tu, mambo inakuwa mzuri kabisa. So itakuwa 98,800. Hizi ni marks una print. Hizi ni marks una print. So you just need to be a little bit keen and you are good to go. Then share premium, we were able to introduce share premium. Was it 5,400? Yeah, 5,400. Yes, 5,400. What else do we need? Okay, there's a liberation that they gave us under these. That liberation, the parent company at that point, liberation, you can adjust it and put it here, whereby the parent you pick 100 and the subsidiary you apportion it. Sasa kwa hii liberation ya nini, we can tend to apportion that of the subsidiary and that of the parent we pick 100%. Only at that point. Only at that point. So liberation, you can put it or you ignore it. But let's put it 2260 plus whatever that the subsidiary has for 20. Subsidiary kuna liberation ya ngapi? Subsidiary. How much is the liberation for subsidiary? Is it for 20? Ama ni ngapi? Subsidiary 420. So you just pick uangalie parent ilikuwa na ngapi hapo. Then you put your figure there. Then things to do with the retained earning, achia examiner. Things to do with the NCI, achia examiner. Lakini if you manage to finish that the 5 questions, you can come back and do them. Then go to the non-current liabilities. Non-current liabilities. Go to non-current liabilities. You check what you have. Do you have any? Okay, tuko na ngapi? Tuko na 10% loan stock. That's a free mark. 10% loan stock. 10% loan stock over 24 na 32. 400 plus 32. 100. That's give me 56. That's still a mark. Then I go to current liability. Free marks hapa. Current liabilities. These are free marks. Hakuna kitu unafanya hapo. Hata bila kusoma swali, my friend, utapata marks zako 10 already. Bila kusoma swali. Imagine. Bora uko na knowledge. Yani, if you have the knowledge of what is supposed to be done, it will become very easy for you to just ace this in first attempt. Current tax 1640 plus 940. So current tax in ngapi? How much is our current tax here? And then you'll be able to finish it like that. So how much are we getting under the trade payable? How much are we getting under trade payable? How much are we getting under trade payable? CTA ni 2580. 2580. And the other one is a trade payable. If you less 7420. And that's done. Don't do anything else. Just live for us. Live for us like that. Live for us like that. And you'll be surprised. You'll get your marks. You'll get your marks. You get your marks. You'll get your marks. Okay, let's look at IAS 28, investment in associate and joint venture. We can introduce that. Investment in associate and joint venture. IAS 28. IAS 28, investment in associate and joint venture. Investment in associate and joint venture. So find as many questions or do as many questions from that area. And remember, we've said that it is not a matter of you balancing. No. Correct entry. How many entries are you able to place there which are correct? One enough. So investment in associate and then joint venture. Investment. Associate. a joint venture. So this is guided by IAS 28. IAS 28. Investment in associate and joint venture. Investment in associate and joint venture. So you say that an associate is a company where parent company has significant influence. An associate is a company where parent company has significant influence. Has significant influence. Parent company has significant influence. So what is significant influence? We can define that. You say that significant influence, it is the power of a parent company to participate in making operating and financial decision. So I repeat, significant influence, it is the power of the parent. It is the power of the parent company. It is the power of the parent company to participate in making operating and financial decision. Operating and financial decision. Operating and financial what? Decision. To participate in making operating and financial decision. Class, what did we say? For a company to be called associate, the parent company must have acquired which range of shares, which percentage range of shares. For a company to be called associate, parent company must have acquired a range of 20 to 49, right? So the number of shares acquired is either 20% to 49%. So if you find a question whereby the acquisition is 30%, 40%, anything which is within the range, that one is automatically an associate company. And by the way, the secret for the associate is that we don't consolidate. We don't. 20%, 20%, only percentage. We don't consolidate items of the associate. We don't consolidate items of the associate except under the income statement. So these are not. Ukipatana, if you find that you have an associate in your question, you just scrap, because I just need one item. I just need one item in the income statement which I will consolidate. Which item is that? The share of profit. Other items in that? 𝗂𝐻𝐵. So associate, we do not consolidate items of the associates. That's according to the standard. The standard does not allow us to consolidate items of the associate nor joint venture. So the way we treat joint venture is the way we treat the associate. So if a company is a joint venture or associate, don't consolidate except one item in our balance sheet and also in our income statement. In our income statement, we bring together just the share of profit. In our balance sheet, we bring together the investment in associate. Those two items. So it become very easy when dealing with this. Then 50%, when a company acquire 50% of shares in a certain company, that other company is so let's see, in 20, this is the percentage itself. See at in 20%. 20%. Okay, good. 50% joint venture. An age of 20 to 49, an associate. So IAS 28 state how the parent company account. IAS 28 states how the parent company account for investment in associate and investment in joint venture. State how a parent company accounts for the investment in associate and also investment in joint venture. Investment in associate and investment in joint venture. So there is a equity method. They use the equity method. Use the equity method. So you say that IAS 28 state how the parent company account for the investment in associate and investment in joint venture. So when preparing consolidated income statement, when preparing that, parent company should not combine. Parent company should not combine. Parent company should not combine similar items of revenue and expenses. Similar item of revenue and expenses. Similar items of revenue and expenses for associate and joint venture. Associate and joint venture, except for the profit after tax, for the share of profit after tax. That is the only thing that we are going to consolidate or to bring together. That is the only thing that we are going to bring together. That is the only thing that, for example, we have a parent company hapa, on a subsidiary hapa, and we've been told that the 40% was acquired. So for me to, whatever that I'm going to consolidate, I've just, maybe I've been told that the part ya hii ni maybe 70, part ya hiyo ni 70, and assume that acquisition is at the start of the year, so nitachukua tu 40% of 70. 40% of 70, this is what I'll consolidate. That is what I'll take to my what? That is what I take to my consolidation. Group share of what? Profit. So, under statement of financial position, under statement of financial position, under statement of financial position, the standard does not allow combination of similar items of assets and liabilities. The standard does not allow, allow combination of similar items of assets, of similar items of assets and liabilities, except for investment in associate. Except for investment in associate. Hiyo tu ndio inakubaliwa. Except for investment in associate. So hiyo tu, that's the only item that we are going to consider while consolidating. Any other, we will not. If they are hot air. So how now do we get investment in associate or joint venture? Computation. Investment in associate or joint venture. Remember, the way we are treating associate and joint venture is the same. So first of all, you look at the cost of investment. Cost of investment. Is it there? Cost of investment. Add parent company share of post-acquisition net asset. Add parent company share of post-acquisition net asset. Parent asset company, that is after acquisition. This is you add, then you less impairment of goodwill. Kama iko. Impairment of goodwill. Whatever that you get there is what we call the investment in associate. Apata investment in associate. So that is the formula of getting the investment in associate. You get the investment in associate. So that is it. So next time we meet, I don't know whether Saturday you can have time. Fanya swali moja. What time on Saturday? Do a question under this. Maybe you can just try to check May 2016, question number 4. May 2016, question number 4. That is the question that we are going to look at next time. Question number 4. May 2016, where you saw me, see what you can do. Just do something. Because, you know, at 10, see, after 10, we can maybe plan for another. If at all, we shall have an account, a Zoom account, and that was but let's see what will happen. So remember, for this one, the question you need to remember, or what you need to remind yourself is that if I'm dealing with the associate of the joint venture, I don't require those items. I need just one item, parent share of profit, and I just need what? Investment in associate. You can get the whole of those marks, all those marks, without even bringing in the two items. Unaweza pata by following the format that we had. The format that we had, and the general preparation of this consolidation. Good. So let's see what will happen. But meanwhile, you can be checking that question, see what you can do, and see what you can do under that. And then you'll be able to proceed from there. Otherwise, this is marking the end of our today's session. You all have a blessed day.